Hey everybody, if you were wondering what's a good credit score to buy a house, I'm going to let you know coming up. Hey everyone, if you've been trying to work on your credit and you have barely been seeing any results, you need to go ahead and take a look at the workshop that I just opened up that is currently free so that you can learn where you went wrong while you were trying to work on your credit. During that lesson, you'll learn the 4 don'ts when it comes to working on your credit, the mistakes people make when writing dispute letters, why you shouldn't only dispute with the credit bureaus, and also the accounts that people waste time disputing. Not to mention, you'll get to see real results from a customer who used my methods and they were able to get their credit straightened out and bought a brand new home within 7 months. So go ahead and sign up for that training today. The link is going to be down in the bio. And while you're trying to work on your credit, you have to see all 3 of your credit reports and scores. And My Score IQ, a company that I use for myself and for all of my customers, has a $1 7-day trial so you can see your credit reports and scores so you can know where you stand, because you can't work on your credit without knowing what's going on all 3 reports. So please check out My Score IQ. The link to them is going to be down in the description as well. Will Frazier here, your credit expert, bringing you the tips you need to get your credit back on track, because what goes down must come up. And before your score drops 333 points, make sure you like this video, subscribe to the channel, and turn on notifications so you can get notified of every video I drop just like this. So today we're going to be going through what credit score you need in order to get a house. Now, there are several different factors when it comes to getting a house. Most people aren't familiar with all of the different loan types that they are. You may have heard of a few of them, but there are different types of mortgages. There are different types of requirements depending on which mortgage you get. And there are also other factors like your debt to income ratio and different factors on your credit report that determine if you can get the home, not just your credit score. And not to mention, going into 2021, you want to have an idea of what you'll need to do, because COVID has also impacted what credit score you need in order to get a house. So based on what I've seen this year and based on how things are looking going forward into 2021, we are going to talk about what you need to have as far as a credit score in order to get into a house. Just so that you know, any information that I share with you right now is going to come from my experience in being a credit expert, also being a realtor in 2 different states, and working with different mortgage lenders in those states and outside states. Not to mention, you can look up some of the information as far as requirements on the websites of these different mortgage types I'm going to mention to you. So first, we're going to start off with the FHA loan, which most of you have probably heard of. The reason why most of you probably have heard of an FHA loan is because it is the most popular home loan for first-time home buyers. The reason why it's the most popular is because it has the lowest score requirements compared to any of the other loan types. Now, FHA is a government organization which basically backs a loan, a mortgage loan that a lender would give you in order to get a house. What I mean by that is, they basically tell the lender, okay, if you give this person this loan, even with their lower score and whatnot, we will pay you back any money that you do not receive back from this person should they turn out to actually be risky and not pay you back the money. So because of that extra insurance that they get from FHA, they are able to lower their score requirements and allow more people to be able to afford homes. Now, based on the general guidelines of FHA mortgages, you will see that a person is able to get a home loan with as low as a 580 score. That would allow you to have a 3.5% down payment, and you would still have to have mortgage insurance on that loan. Now, don't confuse mortgage insurance with homeowners insurance, which is what you would have to cover you. The mortgage insurance basically covers the lender. Now, with FHA, based on their guidelines, you can get approved with lower than a 580 score, but you would have a 10% down payment versus a 3.5% down payment. But usually the ideal guidelines that most lenders want you to be at in order to approve you is the 620. Now, mind you, for all of this can vary by lender, because some lenders do change up their requirements on what they would allow, on if they would take somebody lower than a 580 or if they would take somebody at a 580. Now, what has happened this year because of COVID and probably going forward into 2020 is that those score requirements have been increased. A lot more lenders want you to be at about a 660 middle score in order to get approved. Now, if you're unfamiliar with what a middle score is, basically, a mortgage lender will pull all 3 credit bureaus and look at all 3 credit scores. They will go with the number that is in the middle. And by in the middle, I mean they'll look at the highest number and the lowest number, throw those out the window, and go with the number that is actually in the middle. So to put it simply, if you're trying to get an FHA loan, ideally you would want at least 2 of your scores to be at a 660 or higher FICO score to make sure that you can get approved for that. Now, the next loan that we're going to look at is going to be a conventional loan. I'm pretty sure a lot of you have probably heard of a conventional loan as well. Now, with that conventional loan, it isn't government backed by any agency or anything like that, so the requirements for it usually aren't as lenient as an FHA loan or some of the government backed loans. Now, with conventional, you've probably heard they have a 20% down payment, but with some lenders, if you have a decent enough credit score, you can get approved with a 3% down payment. But once you've paid 20% of the loan value, you won't have to have mortgage insurance. Before that, you will have to have mortgage insurance, but the good thing about the conventional loan is it can be removed after you've paid about 20% of the home value. Now, what that would mean for you, of course, would be a lower monthly payment because you're not making that extra payment every month towards the mortgage insurance. Now, with conventional loans, it is said that most of the guidelines around that are in the high sixes, but after talking to a few lenders, I have found that a lot of them are saying that people are only getting approved if they're in the 700 range or higher. And again, this can vary per lender. These are just the lenders that I spoke with. You may hear something different at a lender that you talk to. Now, moving on from conventional, there's also a VA loan. A VA loan, of course, you have to qualify for from your military activity. But if you do qualify to get this type of loan, there is a 0% down payment and no mortgage insurance. Now, the score requirements on this are around a 640, 660, depending on where you go. And the other loan type, which is very good, is the USDA loan, or a rural home loan. Basically, to qualify for this type of loan, you have to get a home in a rural area, but you can't get it within the city. Now, this one also has around a 640, 660 score range that is required of it, and it also has 0% down payment as well. So the USDA loan and the VA loan are very good loans because of that 0 down payment. But based on the guidelines and everything that's going on, in order to get approved for most of these mortgages, I would say that you need to get your score up to at least a 660. Get two of your scores up to at least a 660, and make sure you're looking at FICO scores when you do that. Now, if you haven't had access to a FICO score yet and you've been looking at Credit Karma or something like that, make sure you check a link in the description which will give you all 3 of your FICO scores for just $1 with a 7-day trial of My Score IQ. And also, if you guys have heard anything different in regards to these score requirements at different lenders, or if you've heard of a lender that actually will get you approved at a lower score, please make sure you leave their information in the comments. Now, what are some other things that can affect you when you're trying to get the mortgage? Like I said, your DTI can actually determine if you get approved for the house or not. You can have the score and a clean credit report, but if you don't have the income, which is what is the main driver of your debt to income ratio, then that means that you are going to have trouble trying to get approved for that home. So basically, they look at your monthly expenses that show up on your credit report versus your income to try to see how much you can afford to pay. So if you don't have a good enough percentage, meaning a low enough percentage to qualify, then that means that you will get denied even with a good credit score. And your debt to income ratio, DTI, also determines how much money you'll get for the house. So the more freed up cash flow that you have coming in every month, the more money you can get approved for a home. It can be the difference between you getting a $100,000 home or a $200,000 home. It all depends. And also, if you have too much bad debt on your credit report, meaning charge-offs and collections, that can also affect you. At some lenders, if you owe more than $2,000 in bad debt, it can actually cause them to add a payment on that debt into your debt to income ratio, which could put you over the proper percentage and cause you to not be able to get the home. Or it can significantly lower how much you're supposed to get for the home. So keep that in mind and pay attention to the debts that you have out there and try to eliminate as much as you can before it's time for you to actually try to get a house. Another thing you want to look for, if you have recent late payments on your credit report, meaning within the last 6 months or so, that can actually cause a lender to tell you need to have reserves. Now, what are reserves? It's basically, once they do a debt to income ratio calculation to see how much mortgage you can afford every month, if they see that you have late payments on your credit report that are recent, they may tell you that you have to have at least 1, 2, or 3 months worth of that amount of mortgage payments saved up in a bank account. So let's say they say you can afford $1,000 a month mortgage payment. They would say if you need 3 months worth of reserves, you would have to have $3,000 saved up in a bank account. All of these are some factors that you want to keep in mind when it's time for you to go ahead and try to apply for the house. So make sure you are keeping these things in mind, looking at all these things before it's time to actually apply for that mortgage, and make sure you work on any issues that you may have before you go in the doors or before you call to apply, so that you can make sure that you are in the best place in 2021 to go ahead and get yourself a new home. So I hope this information was helpful. I hope you got something good out of it and that you're able to apply this and actually get approved for your first home. If you're gonna need some help working on your credit, don't forget I have a free workshop down in the description, and also I'm gonna link to another video which will help you in your credit repair journey. Thank you guys for sticking around to the end of the video. I'll see you guys next time.